Hey traders, welcome to Charts and Coffee. Hope everyone's having a great Friday morning. We've already had an 8:30 hot zone by way of the Empire State Manufacturing Index. And anytime we have that red hot zone sitting on the Forex factory calendar, it's time to take a sip of coffee and take a look at what the reaction is, not so much guessing at which way the volatility will go, but rather wait for the volatility to happen and see if that has carried price to a level that is useful to us. All right, so we do have one more hot zone to come, and it's not the preliminary University of Michigan consumer sentiment, but rather that very stealthy inflation expectation number at the top of the hour, which means the bell's going to ring. We're going to get our clearing period, our opening range, and then boom, at the top of the hour, 10 a.m. Eastern, we're going to have this hot zone, which might present possibly the best opportunity for some kind of setup we're going to have today. We are still averaging in the Sector Secrets Mastery about 2 to 4 day trades every morning by about 10:35, which is to say during that 65-minute period, we are finding direction, getting our setup, and getting our entry trigger. Of the 2 to 4, what we're looking for, 2, 3, 4 times a week is a nice runner. We've had a runner in JP Morgan this week. We've had a runner in Amazon this week. And we're looking for those types of setups, which really give us, from a day trading perspective, a really nice outsized gain. All right, now what do I have here in front of you right now? What is this, Rog, that's sitting on top of your screen? All right, so what we're looking at here is the normalized performance for the week. What has performed, all right? What has performed and underperformed? And it's interesting. It's a mix. If you're wondering, I'm kind of seasick after the action of the last easy now 6 weeks. Actually, no, I'd say the first 2 weeks of August were actually really, really good. Last 2 weeks of August acted exactly like the last 2 weeks of August tend to, and the first 2 weeks of September feel like just more of August. And when I take a look at what's happening right now, take a look at our strength names. XLU, that's a defensive name. XLY, that's the third heaviest weighted sector in the NASDAQ, and XLC, the second heaviest weighted sector in the NASDAQ. After that, we have XLE and XLF. Those have been actually pretty darn good. JP Morgan has been actually rather excellent this week, as has the strength in crude oil and energy stocks like Exxon and Chevron. All right, what's at the bottom of the list? Well, this is where it gets weird again. XLRE can usually be considered a bit of a defensive corner of the market. And XLK is your number one weighted sector within the NASDAQ, and XLI, well, believe it or not, that has not that much implication on the Dow, not at least as much as it used to, far less than financials. So Apple has been a big reason for why XLK continues to struggle. We have very odd markets, gang. And when things are kind of lingering over the macroeconomic uncertainty of whether or not the Federal Reserve hikes in November or December, when we're hanging over the uncertainty of, in terms of individual sector strength, or whether that be Apple or the continuation of the dollar or crude oil, we shorten the time frame, we focus on the 5-minute, and the more uncertain we are, the shorter we make our time frames, the less we require any symbol to continue in our direction for much more than today, which is why I love to call day trading today trading. All right, so as always, gang, phone lines are open for your requests. If you have any questions, feel free to type them on in. Let's take a look at what's going on in the broader averages. And let's jump on over to the charts. And there we go. So taking a look at what's happening this morning in the S&P, and we are below some key levels. And I would have more of a bearish opinion of the S&P based on two things that are really very much in agreement. The daily time frame below some key levels that would make it a little bit more bearish on the morning, and the 5-minute structure itself, which would definitely make my opinion of what's happening more bearish. We actually have a downtrending structure on the 5-minute. You can see there the red multi-trend right down in here. That's weakness, gang. And so to kick off the morning, now I'll see where we are in 26 minutes, 25 minutes. But to kick off the morning, if this red lower row is steady, if it holds this red, it will be shorts and shorts only until something changes, meaning we either go neutral yellow or possibly even green. Same thing for the NASDAQ. Same thing here for, well, the Dow also red, completely different weighting. So notice as we go from NASDAQ to S&P to Dow, we're going from a primary emphasis on tech sector weighting to financials. And then to keep on with the financials, we go to RTY, which is going from big banks to regional banks. RTY is in probably the worst mood of all. It's the most really emphatically lower. The downtrend's been in play for the longest period of time. And that's where the history of the multi-trend is really powerful. I can see for how long the downtrend's been in place, not just that we're weak, right? Not just a sort of right edge opinion of what's going on, but how long have we been weak for, right? In terms of the pre-market mood. All right, what else are we going to take a look at? What's going on with bonds? What's going on with bonds? When I take a look at what's going on with bonds here, you'll notice we're still in a downtrend on the daily time frame. So it's tough to do much more than either longer term 1 hour time frame or daily time frame short, or just be nimble and look at a 5-minute time frame, look at the AM and PM sessions and just take it from there. All right, so ultimately a few things to keep in mind in terms of what we're going to be dealing with in terms of scheduled economic releases. Empire State already in the rearview mirror. We have the consumer sentiment, yes, but more so the consumer inflation expectations at 10. And the other thing to keep in mind is we have assembly plants. And someone I saw in our essentials room, Turbo, asked, what about the UAW strike? So 3 different states, 3 different car makers. These are all gas-powered vehicles for whatever that's worth. And so I think you've got Jeep. I think you've got a Toledo plant. I'm trying to remember what I read earlier this morning. And this has been brewing, gang. This is not a surprise. GM and I think a Ford assembly plant. But I think for those of you wondering, is this a big deal? If you Turbo, whenever I see this a strike, and I'm sure just like you and a lot of folks listening to me right now, this is not your first rodeo with a strike. So when a strike happens, for me, I always think about which plants, because they get very specific. It's not all the plants, it's which plants. And the one that I thought was really interesting in terms of the GM plant, it was the full-size vans. And these would be mostly things that would be business and government buyers. I thought that was a very unusual shutdown. So take a look. When we look at the consumer side of things, say, for example, Ford, they shut down the Ford Ranger and Bronco plant. Gang, nothing against the Ranger and the Bronco. I love a good old-fashioned 1980s Bronco, that big brick of a truck. But think about what's been shut down and whether or not, other than the initial shock of looking at, say, F, and how much of this is already discounted. So right now, Turbo, I got to tell you, most of it is not really the one that's probably the most impactful is the Jeep shutdown. That's the way that I look at that. So look at which plants have shut down and then, think downstream of that. And right now, none of those really are catching my eye in terms of, again, other than the shock of a strike, which is always going to be negative, right? But I don't see the implications that far reaching. I'm not going to say we're down in the Dow because of the strike, because remember, the Dow is weighted mostly in financials. So I'm going to be looking at JP Morgan. I'm going to be looking at Bank of America, Wells Fargo. So hard right now to say, but right now it's not really getting my attention all that much. But thank you for the question. All right, so let's jump into, is this good news for Tesla? It's not bad news for Tesla, but I will say none of the plants that are shut down are electric vehicle plants. So no, I would say, Anthony, generally speaking, again, looking downstream of actually what's been shut down, I would say it's just a non-event. I would say it's a non-event for Tesla. It won't hurt, right? On the surface, it seems like great, right? But I think it's really a non-event for Tesla. Whatever Tesla was doing, it will probably continue to do. All right, so next up is, and yes, by the way, gang, if you haven't already, if day trading is something you want to add to your toolkit, to your skill set, we still have our day trading class underway. Yes, the class has been recorded, but simply that means that you can watch that class at your leisure and then join us in the mastery with the HPMRs and with my day trading toolkit. So that is absolutely still available. simplertrading.com/clarity. All right. So first question coming in from YouTube. Ken asks, SPY or ES on September 1, a sell-off began for 2 or 3 days. Okay, let me go back there. That seems sort of forever ago at this point. So let's go take a look. All right. So you're talking of about 2 weeks ago. Okay. Currently ES above the September sell-off. All right. Which do I use? Oh, okay. So the answer is, which do I use, S&P or ES? Oh, great question. Absolutely. And I'm not even going to hedge. Ken, S&P futures. The S&P ETF, and this would include the SPX, is really more of a 9:30 to 4 window. So I have these little 9:30 to 4 chunks that happen Monday, Tuesday, Wednesday, Thursday, Friday. S&P futures are 23-hour chunks that start on Sunday evening and end on Friday evening. And so it's a much more total or complete view of what's happening with the S&P 500, because it's reflecting everything but 1 hour a day. It's a 23-hour a day market. So I'm getting the Asian session opinion, European, UK, US, and all over again. So definitely the S&P. And yes, I can see the sell-off you're talking about here. I mean, we actually peaked at the very end of August, right? So down, down, down. But I'll tell you this much, in terms of the chop. We've been choppy since the first week of August. So this is really just back and forth chop within a fairly choppy environment that's been now in place for over 4 weeks. So I don't look at this in any different a way than the sell-off we saw through August, right? We're just going to go back and forth within a range. So for me, Ken, the question is, what is the range? And you can see the range has been in play and already identified by the automated Darvis 2.0 or 3.0. So 2.0 is the free version that we make available, and 3.0 is the premium. I know a lot of you that just took the day trading class, you've got the 3.0. Now, if I've already identified these zones, and these have been identified since, let's see here. Oh gosh, yeah. It's been a minute, right? That's where we're stuck, Ken. That's where we're stuck. So depending on whether we're sort of on the upswing or the downswing in terms of the slow stochastic, take a look. Am I on the downswing of the slow stochastic, or am I on the upswing of the slow stochastic? I can focus on the yellow resistance zones of the daily price movement range. And on the upswing, I can take advantage of the gray zones, right? And so that's all I'll do, but we're stuck in that range. So here is my resistance, and here's my support. Cool question. Yes, S&P futures, absolutely. And S&P, so when I look at the ES, right, that maps to the ever popular SPX, SPY, as well as the MES, the micro S&P, right? And then these, of course, map to financials, tech, healthcare, and on, right? If we were to kind of do a sort of a sector index stock tree, then I end up at XL, K, XLF, XLV, right? And then I end up with two heavily weighted stocks. See, this is how we scan, by the way. Again, my sector secrets mastery folks will say, oh yeah, Rog, you start with the S&P index, sector, stock, and then I end up with Apple, Microsoft, JP Morgan, Wells Fargo, UNH, JP Morgan, and it just kind of all is this great connective thread. But yeah, ES for sure, my friend. Yes, thank you for the question. Cool question. All right, next up, Tech Trader Joe. So I would like to get more involved in VScore. Can I lead me to where I can start learning about the tool? Yeah, VScore. So I keep the VScore on all my charts. So I have two layouts. I've got my volume max layout where the VScore is running, and I've got my multi-trend HPMR layout where I have sector slow stow and my HPMRs. And VScore is going to be the most powerful step into price-based volume analysis, meaning I really don't care if there was volume at 2 in the afternoon. I don't really care if there was volume on a Tuesday. What I do want to know is where the volume was at and how many standard deviations from the mean was it. And that's a completely different view of volume. In fact, I've been using VScore since 08, and that's when I created the VScore out of sheer desperation. Again, I wanted to find out where volume was stacking up, not again based on time or date, but at price, right? So things like a volume weighted average price and a VScore are very, very, they supplement each other. They contribute to more clarity. And so if you want to start getting more involved with VScore, obviously put it on your chart, join me in the Sector Secrets Mastery, and I'll show you how I use it. We have a class on it, which includes the VScore indicator. But I would look at the extremes, start with the extreme reading. It's not necessarily that dissimilar to the way that you would use a slow stochastic in the way that I teach as well. All right. Okay. Next up, let's see. Kay Harper says, looks like our portfolio MCD and JP Morgan are going up. I sure hope so. Yeah, that's kind of Kay, thanks for bringing it up. That's kind of I don't talk about that a lot, and I probably should, because it is one of my favorite things we do in the mastery. So, at some point, we're about 3 or 4 years into the mastery. And at some point, Trish, the Trish boss, many of you know the Trish boss, unsung hero of our mastery. And if you love the day trading class, that was absolutely Trish's brainchild. And she said, hey, we need to add what you do on your weekly portfolio to the mastery. We're already day trading in there. We're already swing trading in there. Why not just go ahead and do all things Raghee? I said, fantastic. It's not super active, but we are finally getting some movement in our favor in a number of individual stocks, which I have been hesitant, quite frankly, to do. But we're finally getting some good movement. Now, we have some great positions that we've already built in things like XLK. When I say great, we built XLK from about 122, 50 points ago. So these are slower moving setups. These are setups that I'm looking to hold at a minimum of 6 months. So it's really much more, how am I positioning myself in my longer term portfolio? I'm not here to tell anyone how to invest. Not at all. I'm just showing you when I stretch the time horizon out, I'm still thinking like a trader. Even investing to me is simply a longer term trade. And so we're doing a lot of that in the room as well. And that's been rolling along pretty well. All right. So yeah, thanks, Kay. Thanks for the reminder. All right. Next up is Michael, who asks, I'm just learning Thinkorswim. Should I have a working knowledge of the platform prior to joining me or not? Michael, I'll tell you, I'm not super adroit on any of these platforms. I'm not. I just know what I know. I know how to navigate the platform. And so what that means is there's some basics, Michael, and we teach the basics too. So a couple things. We have a shared chart, a shared item that we have in the, hang on, I've been playing around with this thing called a Kinnean. It's this red light therapy thing. I overdid it in yoga yesterday. That's why I get away from the charts midday. And man, I overdid it on my knee, but this thing's been really great. This little Kinnean red light therapy thing. Ooh, all right. So anyway, um, I've been learning. So what I would say is this: because you get the shared item chart, you don't really have to do a lot to set up your actual layout when you join us in the mastery. Number two, all I use in the mastery is I use the good old fashioned option chain, right click, single, buy call, buy put. So you do need a working understanding of how to place a limit order, which is about as basic a thing as you can get. You would also like to have a working understanding of how to place a stop order. And then I show you all how I create alerts and things. So it's really a very basic understanding, Michael, because A, I use a cash account. I don't trade spreads. And it's really just buying and closing puts and calls. That's it. So I don't think you need a very sophisticated working knowledge at all. I think it is worth maybe watching a few videos or getting one of the TOS customer support representatives to walk you through some basics. But no, you don't really need a sophisticated understanding of the platform because frankly, I don't have one. I just need to be able to put my order in. It's an order ticket. I need to be able to place limit orders. I need to be able to place stop orders, and that's it. No OCOs, no if thens, no markets. Really simple. 2 orders, price conditional, park them, and then let them do their thing. So thanks for the question. All right, Jim asks, isn't ES higher now because it is now on the December contract? In terms of the structure, not solely. I'm not sure what the question is, Jim. So isn't it higher now? I mean, the price is where it is. This is where the December contract is trading. I wouldn't call it solely because of December contract. The September contract was moving higher as well. There is that rollover gap, if that's what you mean, but I don't think the rollover gap alone is the reason for the structure, right? The structure that we're looking at is going to be influenced up until last Friday. It was very much influenced by the September contract. September hands the baton off to December, and December is going to have a gap. And no, I if I'm understanding the question right, Jim, I won't credit December for where we are. Just that's where the price is, but the underlying structure, the movement that we're seeing is still very much going to be predicated on what we saw in September, right? And the longer we get into the December contract, it will then be reflective of what we expect the December contract to ultimately yield when we get to that final notice day. All right. Okay. So next up, any reason I prefer trading options to futures contracts? Tony, I think a lot of folks think I don't like options, futures. That's not true. Look, Tony, I've been trading Forex for 20 plus years. I've been trading futures since I was 15 and a half years old, right? I turned 52 this month. So I love futures. However, there's 2 things I know about futures, and I've watched this, and it saddens me. There's a lot of leverage in futures. Futures move very quickly. Overnight, futures positions have become ridiculously unaffordable for the vast majority of traders, meaning the overnight initial margin requirement is absolutely bonkers. And oh my gosh, I'm running way over on time. I need to shut up. Sorry about that, gang. I didn't realize it was already 23 after. Great questions today, by the way. So no, I love futures, but I do believe it's like handing a brand new driver the keys to an F1 car. How do we think that's going to end? Not well for the driver or the car. So in my opinion, if you start off with the slower moving, more affordable, very scalable ETF option alternative, when you do want to move up to futures, and I do think it's a move up, higher volatility, more dollars per point, right? If you want to move up to that larger, more volatile contract, you can, but you've done so with the training wheels. You've done so in a way that's already taught you how to understand what's happening in the index with a lower cost, therefore lower risk from that perspective, asset class. Some folks never leave the ETF world. And then the other part of it is, Tony, quite frankly, more traders in the US trade options and trade futures. Again, I love futures, but more traders like trading options. However, the way that I set up the SPY, or even the SPX for that matter, is solely predicated on ES. So if I have a trade in the S&P ETF option, call or put, there will be in tandem an ES futures or MES futures contract. So it's not really a matter of don't trade futures. It's really a matter of please be careful, because if you get into a highly leveraged product very early in your trading career, or when you have a small account, it could hurt, and really badly. So to me, it's just a matter of sort of graduating. I would no sooner put somebody in the gym on day one under a squat rack at 225 than I would put someone, in a futures contract. We build that muscle. And then, yes, I love futures. I do. All right, gang, I've got to shut up now. I'm sorry I went over. I will talk with you all soon. Be good to each other. We have that 10 o'clock hot zone coming up. Futures folks, Sector Secrets Mastery. Sector Secrets Mastery. I will see you in just a moment. All right. Until then, gang.